Hello again, Maverick traders, and welcome out to your currency recap. This is Ankit here, and we are covering the market for August 29th. It's a Tuesday. Let's get into it. Today, we'll be reviewing what happened in the markets, taking a look at broad market analysis, looking at our currency baskets, and taking a look at what's the next good opportunity in the upcoming 24 hours. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the market performance today, it was a very exciting day. I mean, in this quiet markets of summer trading, we are seeing a lot more movement on these news events. So today was job openings. The US job opening had a sharp drop, which caused a big reversal in equities, bond yields, US dollar, gold. So it was a broad market move. So let's take a look at the numbers here. Looking at the equity markets today, of course, we're seeing the relative strength in the Australian dollar and the Kiwi. On the other hand, US dollar, which was one of the best currency for the past few weeks, took a bit of a drop here today, along with the Canadian dollar. So both the CAD and the US dollar kind of working in tandem. Notice that the European currencies is not where the money is flowing. Looks like the story is back into the growth currencies versus the dollar. So we'll take a look at the charts, but we see a big movement, especially if you take a look at intraday charts for both the US markets, the US dollar, and the bond yields. Looking at the overall markets here, again, S&P was up 1.45%. Again, that's a huge move after being under pressure for the past couple of weeks. Looking at the World Stock Index, did the exact same thing. And look at the drop in the bond yields. I mean, bonds have been rising. The yields has been going up quite sharply, and we have seen a big drop today, 2.26%. Look at a jump in crypto, 8.78%. Even gold was up 0.93%, and so is the oil. So as you can see that it was a broad market move. So our focus for the next 24 hours will be looking into what kind of continuity we can expect after this big move today. Looking at the market outlook, we have gone from a -2 now to a +2. So it's a pretty sharp sort of change from the outlook goes. And reason why is that if you take a look at this chart, we were below the 20 to 50 day moving average. And then suddenly with this pop today, we are now above both of those. So this is again a signal that momentum is sort of shifting in the shorter term. Realize that these things can change very quickly, especially on the news events. This week is heavy loaded on news starting tomorrow as well. We have a lot of news events that could change some of the course here. But right now, momentum is looking strong, and we are running into this overhead resistance. Now, looking at the schedule here, realize today was just a job openings. This is again a big sort of an expectation change. We have seen the job openings being really sticky, and this thing has now started to crack here. So that's a good news for the Fed to sort of slow down on the rate hikes. And again, everything kind of works in tandem. If they don't raise rates, the dollar pulls back, gold goes up, yields pull back. Tonight, the Aussie CPI is on the horizon, 5.2% versus 5.4%. Remember, big move happened. Often news events, especially if there is a big sort of a expectation miss. So tonight we'll be taking a look at the Australian dollar, especially looking into some of the momentum that we built up today. And tomorrow, realize we have the ADP numbers. I mean, there's a sharp sort of a change in expectation from 324,000 last time to 194. We also have the preliminary GDP number, expecting at 2.4% as well. And another big one tomorrow is the China's PMI numbers. Remember, China's numbers are flashing a bit of a negative sign here, going into a deflation here. So these numbers are very important. And take a look at the Thursday morning as well. We have the PCE price index as well. So lots of events on the docket, and realize that when you have so much on the docket, you pretty much have to take it day by day and be open to both case scenario. Today we had a best case scenario. Tomorrow can be a worst case scenario. So let's get into our currency analysis and see where the velocity scores is. And based on that, we can pick at those pairings. So we like to see when we see velocity in +2 and a +3 range. So you can see that the cryptocurrency are in a +3. But taking a look at +2 and a -2, CAD and the dollar, they took a big hit today. We'll be taking a look at the charts and see if this is a time to short them or is just sticking with the overall trend, which is still to the upside. On the other hand, we have the Kiwi and the Aussie that's been performing terribly. Got a nice little boost here. So today was a bit of the counter trend trade move, because if you're following a trend, you short the Aussie, you short the Kiwi, and long the dollar and long the CAD. Today, a bit of an upside down day. Looking at the European currencies, I mean, Euro says franc sitting at a 0. I mean, pound is a -1. I'll be spending a little bit more time looking in the pound charts as well. And then we have the yen being a 0 here. So let's get into the trading.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's start with the US dollar. I want to just highlight where we are in this dollar move. You can see that dollar had a robust move late July and it's still continuing. So the big question comes every time you see a reversal like this: is this the time to short further, or is it just a shorter term opportunity? So right now, as you can see, we are up against a key resistance and we just pull back from there. We just got to keep in mind is that we are still in this uptrend in the market. So if you're looking for any trade right now, that would be a little bit of a counter trend trade. But right now, if you just take a look at the trend, if you just follow the trend, we're just falling in the on this trend line here. So the question is it the time to short? I would rather look for some sort of bear rally to short into. That again confirms. Right now, if you stick with the trend, I think the trend still is saying that it's going higher, but in the shorter term, it is sort of a pulling back a little bit here. So if you take a look at the dollar and also take a look at the bond yields, they're kind of working in tandem here. Look at the bond yields. Had a nice little big drop here. Again, similar scenario. It's been going up and up and up. Look in the daily chart. We just broke out higher and pulling back a little bit. Again, the same question here. Is this a time to sort of look for a reversal, continue to go further lower, or maybe we try to find a bit of a shorter term bottom here, and this is just a buying opportunity. Remember, in these trending markets, these trends last much longer than these reversals. So you have to be very careful when you're picking these tops and bottoms. Now, looking at the outside of the dollar, I mean, we have to start with growth currencies because they had the best sort of movement today, but realize that on a daily chart, they're just running into prior support, which is now the resistance. So if you follow the trend, you want to be still on the sideline. If you want to be taking part of the short-term move, then you just have to trade the right time frame, which is shorter term. If you look at a 15-minute chart or an hourly chart today, you see that move. But the higher you go, you're less interested in buying it. So always check with your holding period and your strategy and how long you want to hold that trade for. I must say that one thing, Aussie actually underperforming a bit more the Kiwi here. You can see that the Aussie Kiwi really hasn't gone anywhere for the past month or 2 months now. But we see Aussie being a little bit weaker today compared to the Kiwi here. So is Kiwi a better buy than the Aussie? Again, that's what it's showing right now. Remember, we have the Aussie CPI tonight, so pay attention to Aussie Kiwi. I think this will be the one telling you if the Aussie is a better pair or is the Kiwi is a better pair. Now, looking at both charts, you can see that they're both sort of reversing a little bit. Even the Kiwi here is running into this prior support, which is now the resistance. Now, let's take a look at European currencies. Euro, you can see that this thing is just not going anywhere. It's not falling apart. It's not going higher. Same thing with the Swiss franc. It's just consolidating. So you got to put those in a basket and say, well, consolidation's there. I want to be in when they do break out. But right now, it looks like they're in for consolidation. And lastly, the British pound. Now, this thing has turned. I mean, I was looking at this as a more of a bull pullback opportunity, but you can see that today it really failed miserably. I mean, we try to go higher, then failed. So every time you see price go up and then retreats, and try to go up and retreats, you know that's a signal that the price action has sort of shifted here. I want to highlight the longer term charts here. Remember, I was very excited for this breakout on this monthly chart. I mean, this is a massive level of resistance right here. But at the same time, it seems like I'm curious to see how this month will end, but it seems like we might get a bit of a hammer candle here. If we retreat further for the next couple of days, we can be ending with a sort of a hammer candle, which can proceed with some sort of pullback. So I'm no longer as bullish on the pound as I was, especially with this change of that price action. You can see that all sorts of time frames. I mean, 12-hour chart, it did pull back, basing a bit, it wants to go lower. So I'm shifting my outlook here on the British pound for the short term, a bit on the weaker side. As you can see that in other pairings like euro pound, even though euro is not going anywhere, you can see that the euro actually done well against the pound. So same thing, pound Swiss franc. It hasn't really done anywhere, but if you take a look at the price action here, now pound is looking weaker. So I think if you haven't really looked at pound opportunities here, and if you have been continuing to buy pound on these dips, I think this is the level where you want to be a little bit more skeptical here. If you don't want to be looking short, I don't think you want to be going long right now based on the current price action, but we can see a bit of a break if it gives at this level. Look at pound Swiss franc here, massive support on this level. So always just watch out for that. So where do I look for an opportunity next 24 hours? I think I would be looking at Aussie Kiwi first of all, especially with the CPI numbers. If the Aussie weakens, I do like the Aussie Kiwi on the short side. Momentum is sort of shifting here a little bit after consolidating here. And looking at the daily chart, same thing, consolidation. But the bigger goal here is to find out if the Kiwi is going to be leading or the Aussie. I think in that case, we can maybe perhaps take a look at both sort of scenarios. Pound Aussie. I mean, look at that turn over here. It's moving very nicely. Daily chart moving lower. 4-hour chart, we base a little bit, and then we broke lower. So this thing looks like it wants to go lower further. Remember, we are trying to pick the best versus the worst. And look at the pound Kiwi. After a consolidation, it's pulling lower. So this is, again, you can see across the board, pound is no longer showing the strength. And that's where you need to make an adjustment as far as your outlook goes. This is the daily chart. I would like this to sort of come back to this prior resistance, which is now the support. And you can see that there's quite a bit of level for this to catch up to that level. So I think next 24 hours, we want to be looking at some sort of continuation, especially in the growth currencies. But when it comes to the dollar, I'm a little bit split here. I think dollar has been very strong, and you can see that it just come right down to the trend line here. So I would rather want to get a confirmation for a break lower off that. So around this level, I would love to see some sort of sideways price action and then move lower, or maybe have a bit of a bear rally to move lower. Again, that would be the only indication that dollar wants to roll over. But remember, with these sort of trend lines, that's where buyers can come in as well. So a big move today. I think when you look at next 24 hours, it could be a whole different day based on what kind of news events comes out. So be flexible. That's the key here. We are still in this last trading week, which again could still be a little bit more quieter environment compared to after Labor Day when things kind of go in high gear. So for now, looking to trade around these events, make sure you're playing relative strength and weakness. Make sure you know when to be active and not to be active. There are plenty of opportunities, and there's pretty much no price action. So want to be trading when there's movement. Go in cash when there's not a whole lot of movement. Have a proper position sizing, and make sure you're gearing up for the next big move, whichever way that is. Either it's a dollar long or market short. So stay tuned. We'll see you in the next update.